Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that come in as unanimous strong buys. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at 3 companies whose names you might not be immediately familiar with, but they have picked up nothing but buy ratings from Wall Street Analysts. So we're going to take a quick look at these stocks, what it is their company does, and what those analysts are predicting for the stock's future. Don't forget to download the TipRanks mobile app by using the links in the description down below so you can access all your favorite research tools on the go. Now, to find today's unanimous strong buy stocks, we used the TipRanks Stock Screener. On the Stock Screener, I decided to look for large to mega market caps, double-digit upside potential, and a 10 out of 10 on the SMART score, meaning it's likely to outperform the market. Of course, I also wanted strong buy consensus from both the best and all analysts. Down on my list below, I started looking for these completely blue circles here of analyst ratings. And the first company I came across was Axon Enterprise. Their stock trades under the ticker AXON, priced at $205 per share. Now, they have seen some great growth in this recent year, up nearly 9% in the last 6 months. And you will notice a big drop off here, though. And we're going to get to the reasoning behind that in just a second. But first, let's start off with who the company is. Axon Enterprise develops, manufactures, and sells conducted electrical weapons for personal defense, so items such as tasers. Their vision is a world where bullets are obsolete and where social conflict is dramatically reduced, with everyone having access to a fair and effective justice system. Their business is broken down into a few different segments, including their smart weapons, which include the tasers, body cameras, and the software behind them. Axon reported their latest quarterly results on May 9th, and that is the reason for that drop-off. Now, they came out with a really solid earnings and revenue beat, but their updated guidance did indicate slower growth for the second half. For their Q1, they reported earnings per share of 88 cents, beating expectations by 34 cents per share, and their revenue of $343 million grew 34% year-over-year, beating expectations by 23 million. And what's interesting is the company actually raised their full-year revenue guidance. They're anticipating a range of $1.44 billion to $1.46, which would be about a 22% growth at the midpoint. The stock has climbed back a bit following that drop-off on May 9th, and some of that is due to some upgraded ratings from analysts. The Axon stock currently has 9 analyst ratings, all coming in with a buy and an average price target of nearly $250, which would imply an upside potential of over 21% for this next year. And down here, we can see all of those ratings coming in with that double-digit upside potential, including this one from JP Morgan, which was just upgraded from a hold. That analyst tells investors to take advantage of that 15% decline in the stock price post their earnings. The pullback the firm was waiting for came sooner than expected, driven by temporary headwinds ahead of a strong upgrade cycle across body cams and Taser 10. Bonus fact is that Axon just took First Republic Bank's spot in the S&P 500 a couple weeks ago as well. Moving on to our second strong buy stock, we have Everest Re. Their stock trades under the ticker RE, currently priced at $380 per share. They have also seen some great growth this past year, up 38%, and have been fairly flat these last couple of months. The stock also offers a dividend with a current dividend yield of 1.7% and a quarterly dividend of $1.65. Everest Re is in the reinsurance business. Their major business line includes their U.S. reinsurance segment that writes property and casualty reinsurance for large U.S. insurance companies. They also have an international segment focusing on international reinsurance and an insurance segment that writes insurance including property casualty insurance. Everest just shared their Q1 results on May 1st. Now, they did have a revenue beat, but a miss on earnings. While revenue of $3.29 billion grew nearly 14% year-over-year and beat expectations by $190 million, their earnings per share of $11.31 missed expectations by $1.22 per share. But despite this earnings miss, analysts have maintained their buy ratings on the Everest stock. With 5 current analyst ratings, the average price target comes in at $444 per share with an upside potential of 16.5%. Taking a look here, we do have a lot of 5-star analysts too, which we love to see, all with buy ratings from 9 to 21% upside. And third on our list today is a company called Avery Dennison. Their stock trades under the ticker AVY, currently priced at $172. Now, they've had a lot of ups and downs this past year and are currently down about 6% over the last few months. Avery Dennison is in the business of labeling and packaging materials. The company's products are used in nearly every major industry, including pressure-sensitive materials for labels and graphic applications, tapes and other bonding solutions for industrial, medical, and retail applications, tags, labels, and embellishments for apparel, and RFID solutions. Avery also pays a dividend of 81 cents per share on a quarterly basis for a dividend yield of 1.74%. They recently reported their earnings near the end of April, and they did come out with mixed results. Revenue of $2.1 billion missed expectations by $80 million. Meanwhile, their earnings per share of $1.70 did come in ahead of estimates. And with this, the company also changed their future outlook, reflecting a softer guidance for their second quarter. Despite this, analysts are still coming in with nothing but buy ratings. While we did have some analysts lower their price targets, we still have 7 buy ratings with an average price target of $205, which would be an upside potential of 19%. And we see a lot of those coming in following that earnings report, with several 5-star analysts included as well. Upside potentials range from about 10 to 26% upside here. So there we have 3 stocks, all with nothing but buy ratings from Wall Street analysts. Let me know your thoughts on these stocks in the comments down below. Were they on your radar before? And do you agree or disagree with these analysts' outlook? Of course, please keep in mind that these ratings are never guarantees of future performance, and these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what these analysts are looking at and providing some information and entertainment. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up and that you're subscribed to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.